All right, Matt Orton is with us. He's U.S. market strategist, chief market strategist at Raymond James. Matt, good morning. Good to have you with us here. Thanks for joining us as always. Prashant this side. In the U.S., what's driving U.S. markets? Is it the political scenario? Is it just an overextended market which is seeing a bit of a pullback? We saw, tech stocks falling the day before last night. I mean, of course, everything came off. So just what's the driver here?
Hey, good morning, Prashant. Always good to see you. And I think what we're seeing is an unwinding of a lot of big dislocations that have persisted for a very long time. Globally speaking, you've seen reversals in the yen. You're seeing in the US specifically the sell-off, like you mentioned, of some of the mega cap tech names, some of the semiconductors that have gone very, very far fairly quickly. And then you're seeing that coiled spring of just a massive underperformance of smaller companies, I'll say, the average stock in the US market that has rebounded. And it makes sense when you think about it because you have long-term oversold conditions in a lot of the mega cap names, and you have overbought conditions in those names, and you have very, very oversold conditions in the small caps. So the normalization, I think, can continue. But what I've been telling clients is at the end of the day, it all comes down to earnings. Earnings are really the arbiter of where this bull market's going to go. We've got some really important earnings coming up next week in the US with some of the mega cap tech names reporting. And if we're going to see this rally in smaller companies continue going forward, earnings and particularly guidance that these companies can do well in the second half of the year as rates start to come down, that is what's going to be critical to sustaining that sort of upside momentum. I think we will see that from the smaller companies, but again, time will tell, and I would use downside opportunistically. I would not be chasing the rally down market cap, and I'd also be maybe leaning into some of the higher quality mega cap names as well.
Okay, so maybe a bit of a rotation is what's playing out. But Matt, hi, morning. Great to have you on as always. What about politics? How has the market interpreted this new resurgence that seems to be surrounding Donald Trump? And I mean, just for the near term, though long term, it's all about earnings, of course. Near term, do you expect any further price action to price in what's going on? And given the fact that there seems to be some confusion in the Democrat camp as well, in terms of just the candidature.
Yeah, Surabhi, there's a lot of uncertainty right now with respect to where politics are going to go. And I think that might be one of the reasons why you're seeing some indigestion over the last day or so in U.S. markets. I think it's more about position squaring than geopolitics and the political spectrum. But that uncertainty, I think, is forcing investors to really evaluate what you think the world's going to look like come January. And I think given where polling is, given the chaos that you're really seeing across the Democratic Party right now, and not even knowing who's going to be on the ticket, and seeing a more conciliatory tone coming from Trump and the Republicans, who are also trying to welcome union members and more populism, which hasn't typically been a Republican thing to do, I think investors are very much trying to assess what a Trump portfolio is going to look like in January. How should you think about the level of populism with Vance being the vice presidential candidate running alongside of him? What does that mean for business tax cuts? So I think that's why you're seeing maybe some, you're seeing that indigestion take place in the market, because I think the one conclusion you can draw is that there's going to be more reshoring in this country. There's going to be a turn more inside of this country for production. And so that will probably benefit some of the more domestically focused companies over the multinationals.
All right. Hi, Matt. Morning, and good to see you. When, India and Japan, they have been your top two markets that you've been betting on. And you've said that quite a few times on the channel itself. But since India is one of the top markets, let's talk about stocks. The big one that we're looking at today is Infosys. And you've been reasonably bullish on IT-related stocks. But you're looking at taking some money off the table, I understand, and you're loading in further into a bank like ICICI Bank. Tell us about both these two names.
Yeah, absolutely. So fantastic number from Infosys. You absolutely cannot complain about anything. And I think the guidance is strong. The fact that they're noting that you're seeing, I guess, less hesitancy to spend, especially from foreign counterparties. You're seeing a pickup in financial services. All of that's very good news. What I question is how much of that good news has been pulled forward in what we're seeing with respect to the price action. The 8% move in the ADR is very significant. after such big gains that we've already had. So what I'm looking at doing is still keeping a position in the name, but taking some of those profits and maybe rotating into other opportunities that are there. ICICI Bank has been another strong performer. It's been one of my top picks in India as well. And what I look at when I see ICICI is you have really low cost of loans. You have a very, very solid deposit base. You've got the wealth management business that continues to grow. So there's a number of drivers for growth that can move forward. And I think they're levered into the right themes as well, and especially their ability to fund and finance some greenfield projects, which is related to the infrastructure theme in India. That's something I like a lot, and looking to pick up some exposure to other infrastructure names, maybe like a Coal India. If we get any sort of weakness, just given where coal demand is and the heat that you're seeing in the northern part of that country, that's keeping electricity usage incredibly high. So I think there's a lot of opportunities to lock in some of that profit, deploy that, keep it in India, and keep a diversified portfolio. I think you just need to be careful about risk managing right here, because there are geopolitical concerns. There's obviously going to be some beta to global markets. So I think you just want to be careful, but still make sure that you're leaning into what's working.
All right. Absolutely. Matt, great to speak with you as always. Thank you very much for your time. Appreciate it here on CNBC TV18. So that's the word coming in from Matt Orton at Raymond James Investment Management with regards to tech and a bunch of other sectors here in the market. We'll take a